We're going to talk about reverse mortgages. A lot of the stuff that I'll talk about comes from a book by Wade Pfau. He has a doctorate in economics from Princeton and wrote a book, How to Use Reverse Mortgages to Secure Your Retirement. As I'm looking more for the academic data, I go to him for reference. But the first thing I want to talk about is the myths that are associated with reverse mortgages. A lot of people have kind of a bad connotation to it. A lot of that is related to old information about the program. So I wanted to address some of those first. Some people think that they might pass away and then their spouse will have to leave the home. That is not the case. Whenever we do a reverse mortgage, we do the reverse mortgage to cover both spouses in a home. It's actually required from the program. There are no other options for that exact purpose, to make sure that both parties have a place to live throughout their life. A lot of people think that the government's going to take their home. That is not correct. Reverse mortgages are just like any other mortgage, and at any point in time you can sell the house and pay off the mortgage, or you can refinance and pay off the mortgage. There's no more power that a reverse mortgage has over you than any other mortgage type. It's just that you don't have to make payments on a reverse mortgage. People think they're not going to have anything to leave their kids. That is not necessarily the case. The only case where that would happen is if there was a dramatic drop in prices in housing, and that would be a problem for your heirs anyway. But when we do a reverse mortgage, it is put together so that while the balance of the mortgage does go up because you're not making payments, the house is going to go up at a certain percentage per year anyway, as has been historically the case. And so it is created so that at the end you will still have some equity to pass on to your heirs. And a lot of people think it's only for people who are desperate. We call that the reverse of last resort. And it is a program that is good for people who are struggling to make their finances work and have a lot of home equity, but in my opinion, much more powerful as a financial planning tool. So we'll talk a little bit about how a reverse mortgage can be used as part of your financial planning strategy to really improve the quality of your retirement. There are multiple different ways to access your equity in a reverse mortgage. If you have a mortgage, the first thing we're going to do is pay off that mortgage. And then the question is, there's a certain percentage of your home equity that you're going to be able to access. So then the question is, how do you want to do that? The one I see the most is where people take a lump sum from the mortgage that allows them to do renovations, is for whatever project it is that originated the conversation about reverse mortgage. Usually there's something people want to do. And then you get access to an equity line, remainder of the available equity. So if you have a $200,000 line of credit, then that line of credit, the amount that you'll be able to access grows every year that you don't tap into that line of credit. Or you can use it, you can pay it back and borrow it like any other line of credit. One of the things that's significantly different is that you don't have to pay it back at the end, and it is a permanent line of credit, so they can't shut it down. You've seen back when the markets got crazy that banks immediately, like right after COVID, they shut down a lot of their lines of equity. Well, if you were depending on that to make your numbers work every month, that would be a problem. So this is a permanent line of credit that nobody can ever take away from you. One thing you could do is you could say, let's say you want to put off Social Security for a certain period of time. You need 3 more years to get to 70, which is when you get your max payout for Social Security. So then you would put together a 3-year term payment. You would say, I need $4,000 a month for 3 years to allow me to push off getting Social Security until I get my max payout. That would be called a term payment. And then you can also do what's like an annuity. So you could say, I want $1,000 a month for my entire life, and that's how I want to receive my funds. We also can do any combination of that. So there's lots of different options for you as we look at your financial situation and try to make a good decision about what to do. So what situations would someone use a reverse mortgage? It can be used as a loan of last resort. I have a bankruptcy attorney who brings me clients all the time where people are going to her to apply for bankruptcy, but they have a home equity to protect. In her opinion, she thinks it's better for them to do a reverse mortgage than to do a bankruptcy. We do that all the time, especially for folks who have a lot of home equity, but really are only getting Social Security. Those people really do have to leverage their home equity to have a better quality of life. So if you have seniors in your life who are struggling, they won't tell you they're struggling. They want to be really quiet about it. But I've seen seniors deal with all kinds of agony and pain to try to protect their home so they can pass it on to their family members. But their family members don't want them to be in agony every month trying to figure out how to pay the bills. So we can help with a strategy that helps relieve the stress of retirement, financial planning, and then also protects some of your assets for you to pass on to your heirs. So lots of times people are trying to make a decision about whether to go into a retirement community or to stay in their home. I would say since COVID, the vast majority of my clients want to figure out how to age in place if at all possible. And virtually all of them. Nobody wants to go into a home situation if they don't have to. So it's important for us to look at somebody who's got home equity and see what is the best way to help them through the process of aging in place. Sometimes we have to do some renovations to make the house better for them to age in place. So those are all things that we go through with the seniors and with their heirs and try to figure out the best option for them. The reason this program was developed was because as a society, it is much less expensive for us to allow seniors to age in place than to pay for them to be in facilities. If you have priced facilities, you will see the expenses are really out of control, and sometimes the only way for a senior to have a financially low stress retirement is to age in place or to move in with family. So if you have options, if you want your family to come live with you, that's another option for their retirement. Also, some people get a reverse mortgage to pay for in-home care to allow them to age in place.